And that's why we told this honorable member called Mr. Muchero. We know he's a former employee of Treasury. That's why we told him he has a very good presentation, very good figures, but the grounding for those figures is wrong.
I wish, this is a very good banter, because I think this is an education process. No, we actually don't, maybe he was unclear in the way he explained himself. That, you see, our analysis was on development appropriations and recurrent appropriations. Wanacha, I want to assure you, I wish we had brought the documents here. In recurrent appropriations, all debt payments are there. External debt payments, what is in CFS? External debt payments are there. Domestic debt payments are there. They even listed and scheduled. They're all there. So I think this is an education for all of us, because I can assure you they are there.
Chairman, yes, I find it becoming a learning process and a counter-argument. If we could allow Wanjigi to go through very fast and then now relate what you are talking about to the amendment of the PMM Act in relation to public debt, so that we can expense this matter once and for all, rather than...
Okay, honorable members, let's allow Wanjigi now to present uninterrupted.
He can be heard uninterrupted. Let be
uninterrupted. Honorable members, I beg you, can I allow him to present uninterrupted? Then we, please now, you have the...
Thank you, Chair. What you are seeing up there are the appropriations bill development. Whereas I've said, according to the law, all debt is to be taken in the medium term for development. So if there's any debt that has been approved for development, it would appear there very clearly. And the Public Finance Management Act, remember, also says that you can only take money in the short term for cash flow problems, and that short term is viewed as 1 year. So please, if there was any debt to be incurred for any project, it would be right here. And these figures are directly from the appropriations bill development. So over the last 9 years, because when we did this it was 9 years, 2 trillion shillings had been approved by the Honorable House, the August House, for development. Now, in contrast that, we found, go to the next slide. Yes. Now, this is now data from the Exchequer account at CBK, which clearly tells us our debt ratio. Now, what we are seeing is that on the first column, the second column, you see the years, then you have the second column. We have public debt as per CBK data. 2.6 in the first term and 3.4 in the second term. A total of 6.1 taken over 9 years. We have the appropriations development, which is clear about the amount approved by Parliament for development. After all, that's how you develop a line item for expenditure for a particular project. It is through the appropriations development. 2 trillion. So we found a variance between what CBK was showing and what Parliament had done. And that variance was to the tune of 4 trillion shillings. 4 trillion shillings. Now, if debt is to be anchored in development, we did not understand where that 4 trillion above what was passed by Parliament meant. Because it meant that it did not go for any project that Parliament approved. There was no way there was a line item. No way. Next slide. Yes. Now, in the same CBK figures, it showed that they had accumulated a domestic debt over over the 2 terms of 2.9 trillion. Again, domestic debt, if you look at the appropriations, development does not exist anywhere in the borrowings, in any of the schedules, and we looked through it with a fine-tooth comb. Domestic debt does not fund any single project of government. Never has, and it does not. So that debt, we said, had not been authorized by Parliament for any development. And over the years, it had accumulated, at least up to March last year, to 2.9 trillion. Next slide. I think we've exhausted that. Next one. Now, is the CBK data accurate? Now, what we found is the appropriations recurrent. Appropriations recurrent. Okay, just go back. Just go back. It's okay. Next. That one. No, next. Next. Yes. No, next. Forward. 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 Yes. Yes. Now, what we found is that in the appropriations recurrent that we were talking about earlier, the second column there after the years, payments of debt are recorded. They're all recorded and approved by Parliament. And the debt approved for payment from our taxes was 5.6 trillion. That is what has been paid as of March last year. We said against that, take a debt, even if we say it was unauthorized of 6.1, you had a negative 4.7. Now you add what we found was the carryover debt of Mwai Kibaki, it was 2.3. We felt that even if you say the 4 trillion was authorized somewhere, and we don't believe it was authorized anywhere, you still have, and you only have a negative balance of 2.8 trillion. Not the figure we were seeing, next slide, in the central bank account of 8.4. Now, our assertion, let's be very clear. Parliament only approved 2 trillion. 6 trillion was taken. 5.6 trillion was paid. Our assertion is that even if you include Mwai Kibaki's debt, there should be a credit balance in our account of 1.2 trillion. That is our assertion. That if you take the debt that was approved by Parliament, you take the carryover debt from Mwai Kibaki, you take what has been approved by the House in recurrent appropriations as payment of debt, the total we have in our account is actually a credit balance of 1.2 trillion. That is what we are saying is lawful. We do not owe any money to anybody. That is our position. Let's go to the next slide. I think that's a good summary there, right? Repayment of principals, repayment of interest. You can see the total debt that we have paid in appropriations recurrent bill. It is there. That is the total we have paid. But what we are finding in central bank at the time was that the debit balance of 8.4 trillion was a static figure. We were never seeing any figure coming down. Our debt payments were not being shown as coming down. So you have an account that is accumulating debt, and it accumulated to the extent of 8.4 trillion, but we were not seeing any figure where the credit was being taken, was being credited. And we had paid 5.6 over the last 9 years. Next slide. I think we've been through the law. Next. 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 Now, part 2. I think if we start with part 1, because I've just gone through it very quickly, I hope we are, if there's any questions I would like to take before we go to the next.
Let's proceed to the amendment.
Now, we are talking about debt sustainability. Debt sustainability. So where we are coming from, remember, we are saying the law has only approved 2 trillion, but a total of 6 were taken during the term. So another 4 that was above what should have been taken in law. Now, when we talk about debt sustainability, one of the areas we should look at is our credit rating. There are 2 things: the credit rating we now have, and how much of our revenue is going to pay debt. What is our debt service ratio? I know you've been trying to anchor on debt to GDP, and I think it was a bit of an error. I think it should have been, like we do in our homes, where a bank takes our risk. That risk is on a question of how our capacity to service debt. And normally, for a home or a company, our capacity is viewed as no more than 30% of a debt servicing ratio. In this country, we seem to have reached a level that is at crisis point. That crisis point has been reached because what Parliament was doing and what the Ministry of Finance were doing were at variance. And this is why I'm talking about this amendment being negative. They were doing 2 different things that were happening. What Parliament was doing and approving, and what the Treasury was doing. They are 2 different things. And now, you are in an amendment where you're giving the Treasury carte blanche to come and explain to you after they have done it. They have already been doing it when you didn't give them carte blanche. They were already doing it. Now, that carte blanche is very simply this. Our credit rating has now reached B3, the highest credit score according to Moody's. The higher credit risk, rather, that is where we are, B3, almost at C. So they've assessed our liquidity as of May, mid-May. They gave us a credit rating of B3. We're at the amber color. Next slide. Can you broaden that? Just to give you an analysis, that is our revised estimates for payments 2022-2023 of debt, both domestic and foreign, from the budget. 1.360 trillion shillings. Next slide. Widen it. I want to go to the figure. No, yes. Up. Tax revenue. These are your actual tax revenues. You can see that column. 1.5 trillion as of April this year. I think just go and make sure that mheshimiwa wanaona ni tax revenue, sije wanasema tunawapatia figure ingine. Tax revenue 1.5. Next slide. This is now came out on Friday. That is showing our tax revenue at 1.74 thus far. That is the figure that is used to compare with debt payments as a percentage, as a ratio, as a debt servicing ratio. Now, our estimate is that at the end of June, we have averaged about 150 to 160 trillion per month in collections. That is 1.9 trillion. Go to the next slide. Now, at 1.9 trillion, we are paying 1.360 in debt payments, means that we have reached a debt servicing ratio of 71.63%. That is the biggest expenditure of our revenue. And our assertion is that Parliament did not approve this debt. This was done in the Treasury without your approval. Next slide. This is Ghana. This is a statement, is an excerpt from a statement from the Ghanaian Minister of Finance in December last year, where he was categorical. No, I want to read the whole thing. Debt sustainability analysis demonstrated unequivocally that Ghana's public debt is unsustainable, were his words, unsustainable, and that the government may not be able to fully service its debt down the road if no action is taken. Indeed, debt servicing is now absorbing more than half of the total government revenues and almost 70% of tax revenue, while our total public debt stock, including state-owned enterprises and all, exceeds 100% of our GDP. This is why today we are announcing the debt exchange, which will help in restoring our capacity to service debt. This was his announcement in December for what he called the debt distress exchange. He declared default. Ghana had reached 70%. We are at 71.6 this financial year. Sustainability being the operative word. Sustainability. Next slide. Now, I want to address domestic debt. Domestic debt, as you have seen being taken in bonds and bills, is approved nowhere in the appropriations development where debt is anchored. Nowhere. It doesn't exist, but it exists as payments in appropriations recurrent. The payments of this debt are there, but not for development. Now, if the law is clear that we can only take in the medium term for development, this domestic debt is anchored nowhere in any development project. Now, I want to explain to you some absurdities, and I'm using this to start. I hope you'll come here again because we have part 3. This is the absurdity of domestic debt. 2014-2015, we took 292 domestic debt. This is including redemptions, including kila kitu, refinancing. We took 292, right? And we repaid the same year 287. Higher. You go to the next. 2015-2016, 506, we repaid 347. 2016-2017, 414, we repaid 369. 420 in 2017, we repaid 409. 486 in 2018, we repaid 505. In 2019, we had 558, we repaid 514. In 2020, we took 790, we repaid 709. In 2021-22, we took 877, we repaid 823. Last year, we were estimated, we've not reached there, to take 1 trillion, and our repayments, according to the current appropriations, is 1 trillion. I want to explain the absurdity. So we are taking debt, on the one hand, but look, our taxes have equivalent amount of money to pay the same debt. So 2014-2015, 292, we paid 287. So why were we taking debt? Why were we taking debt? We had the cash. And as I said, it's not anchored in law. It is not in the appropriations development anywhere. It did not go towards any project. So why are we taking this domestic debt? I have the next chart that will show that we had enough revenue. In that, we had revenue for all our recurrent expenditure, according to the taxman. And he also lists there that we had enough. So the issue here is that there was a clear motive. Go back. There was a clear motive. If you see, we took debt from the domestic market of 5.3 trillion. We repaid in the same year, whether it is redemptions, whether it's what, or 4.9. So we had the cash. We didn't have to take new debt. The principal payments were 2.3, and the interest payments were 2.6 trillion. 2.6 trillion. This this is our question. If this is what you call debt sustainability, I don't understand it. Because so far, what the Treasury has been doing, outside of the approval of this House, is a scheme that you have not approved. We don't know what this money is going for. It is not going to any project in this country. They have never said they have a shortfall of revenue from KRA, and yet they are paying almost 3 trillion in interest to these banks over 9 years. It is a most frightening figure. Most frightening figure. Now, if you go to the next slide, it shows you categorically, we had the revenue, we had the tax revenue. In 2014, we had 1 trillion, including domestic debt payments that have articulated 200 and something, external debt payments, right? And all our recurrent expenditure. We spent 807. We even had a surplus of 194.
Just to understand. Excuse me, kindly, sir. We borrowed. Are you saying tax revenues for statement of work? I want to understand. Kindly bring us.
Let me explain, Mheshimiwa. This particular chart is this tax revenue as per the statement of actual revenue and exchequer issues, right? So these are the tax revenues that have been collected, all right, and posted. So in 2014-2015, we collected 1 trillion. Our total expenditure on the recurrent appropriations, including debt payments, net domestic, in other words, domestic, external, everything, is 807.
So
the other is like a credit. Is a surplus, yes. Is a surplus. This is what we're wondering, what is going on with the Treasury and yourselves. There seems to be a very major disconnect. We have a surplus, and if you see at the bottom, our calculation, and I'm prepared to defend this anywhere, because we went through these appropriations like a fine-tooth comb with a forensic eye. Our surplus over the years is 1.9 trillion. So you tell us what is happening. Every time we are being told we have shortages. I've also articulated that we have paid our debt to the extent of 5.6 and you never see the credit. You don't see it anywhere in Central Bank that we have paid our debt. Yet nobody is complaining that debts have not been paid. So we never hear, but we never see the credit on the books. You never see it. You just see the debt increasing. You don't hear about you don't see anywhere where 5.6 is recorded over the last 9 years as a credit for debt payments. You don't see this surplus recorded anywhere. And have you heard Kenya Revenue say that they have not met their targets? Never. Until this financial year. Next. Why don't you do it? No, with the top. That one now is even more complicated. I don't even want to go there, because now you'll be in another state. I think I'll leave it. I'll leave it. No, I'll leave it. That you have excess tax revenue. You have payments of debt that have never been accounted. You have debts that have been taken that you have not approved for any development. And the leeway the Minister of Finance has got is only for short-term cash flow problems that are within 1 year. And now you want to give them a blanket check to go and do what they want when they've already been doing it, to come back later and explain to you what they want to explain to you. And the problem is only one, that nobody has articulated to you the fine print of what has been happening over the last 10 years. Our constitution is so good, it already anticipated this issue of sustainability. It anticipated it. And they expected the Parliament to be a major watchdog on debt sustainability. We are now at a crisis point. You cannot give the Treasury any more leeway to come back to you and tell you about debt sustainability. They must account properly for what has been happening in the past under this new constitution before you amend anything in PFM. Because I can tell you, an amendment done in 2014 is what cost us this question of debt that you do not find. An amendment to the Constitution done in the year 2014 under the PFM Act. It was the PFM Act, sorry. The PFM Act attempted to amend the Constitution, where it said that monies do not have to be deposited in the consolidated fund. That literally, monies can go to agents. If I get just get that close. That can go as commissions, bank fees, without hitting the consolidated fund. That amendment, contrary to our constitution, is what has landed us in the problem we are, where 70% plus of our revenue is going to debt.
So,
Maybe you start now summarizing so that we allow members also.
You are now proceeding in a direction that has already been, in our view, abused, has been signs of clear impunity, and you're now amending the act to further give that abuse leeway. Our view is that you must not allow it. Parliament must be the supreme watchdog of the people. You must check the executive. You must reject those amendments in totality. In totality, especially in view of the abuse that you have seen in the past. We close.
Ya huyo ni mwanabiashara ama mwanasiasa mashuhuri Jimmy Wanjigi akizungumzia tu mambo na madeni nchini Kenya. Kwa wale wasomi ambao wanaelewa mambo na madeni za Kenya, ameweza kuelezea mengi kuhusiana tu na madeni ya Kenya, mahali kuna itilafu, na kuweza kuzungumzia tu mambo ambayo ameweza kuyazungumzia hapo. So sijui una maoni gani kuhusiana na Jimmy Wanjigi? Kama hujasubscribe kwenye Wasource TV, na kuomba uweze kusubscribe. Kama una maoni niachie hapo kwenye comment section, ili wakati wote tuko na habari kama hii unakuwa wa kwanza kuipata. Asante sana kwa kutazama Wasource TV.